Yo, what's going on, guys? This is your host, Alex. We're back with another video. We're going to be showing you guys how you can leverage your credit to then start a business, which is the same thing that I did to be in the position I am now to show you guys. So this is pretty cool because I actually did this for myself. I'm going to make this video pretty quick. I do have a more extended version if you guys want to check out. Go ahead and look for it in my videos. This one's going to be a more condensed version, just hitting the main points for you guys. So let's go ahead and get started. The first thing I want to talk to you guys about is the method. This is called credit to capital. So the reason we call it this is because we're leveraging our credit to access money and then turn that money into capital. What we do is first we have to structure ourselves. This is going to be our credit file, our business setup, our banking relationships, and our money deposits to then look really, really good to the banks. So then when we do a funding sequence, we're able to get money. This money can come in the form of 0% credit cards, cash loans, auto loans, or lines of credit. Once we actually are successful in getting the money, the next thing we need to do is deploy the funds to start generating income. This means we get ourselves a coach or a mentor because I'm big on that. There's no reason you should try to figure out something alone. Get with the people that are already winning because they're going to be able to show you exactly what to do to get just like them. And you're going to be able to learn at a much quicker rate because it's no longer trial and error. It's you doing what they say in order to guarantee that success. The next thing you're going to be doing with your funds is buying equipment. This is simple: cameras, self-brands, all that. Hiring a team to help you scale, and then investing into your actual brand. So to go a little bit more depth into every sequence, so that's the outline of how we turn credit to capital. Now, to break this down, we're going to be going over the structure. The first thing you want to do is have a strong credit file. What does this mean? We want to have no negatives, utilization under 30%, preferably at 10% or lower. We want to have credit age of at least 4 years. If you don't have a lot of credit age, get yourself onto a trade line or an authorized user account that has a lot of age, and make sure that trade line is a good one, meaning that it has low utilization, 10% or lower, and it's never been negative, no late payments, and also it has a lot of age. Preferably look for something at least 6 years or higher. Once you're added onto this trade line, it will bump up your credit age. The next thing too is we want to make sure you preferably have at least 2 credit cards of $25,000 limits combined. That could mean 10 and 15, or maybe 12.5, 12.5, somewhere around there. Other than that, hard inquiries, we want to be at 3 or less within the last 12 months. The reason why is because if you are asking the bank for money, they're going to see all these hard inquiries and they're not going to approve you because they see that you just asked other people for money. To be in the best position possible, you usually want to have no hard inquiries within the last 12 months. If you do have some, as long as it's less than 3, you should be good. Usually after 3 hard inquiries in the last 12 months, they're going to deny you anything above that. But it doesn't guarantee a denial. Some banks are going to still be willing to lend to you, but we just want to be in the best position possible. Remember, any hard inquiries attached to accounts that are not open, you can delete. So put yourself through hard inquiry removal if you need that. And remember, no negatives. So if you do have bad credit, work on that, get credit repair. The next thing we want is to have our business set up. What does this mean? If we are going to go for business funding, because remember, there's personal funding and there's business funding. Personal funding is just based off you and your social security number. All this money will show up on your personal credit report. Business funding is you personally guaranteeing the money that your business is taking out. This money is not going to show up on your personal credit report if you go to the right banks and you get the right products. But in order to access that, you need an EIN number, which is given to a business from the IRS. So if we want to do that, we need to set up the business. This means you're going to check with your state and go on their Secretary of State website. This will allow you to file a company. I recommend usually just filing an LLC. From there, they're going to need a couple things: business address, business phone number, business email address, the owners of the company, and then a registered agent. The registered agent is somebody that's going to be on premise of where your business is located. So if you're using your home address, you can put yourself. If you're not using your home address, then look for remote agent service. That way somebody is always there in order to receive your mail. The next thing is going to be a business phone number and business email address. You don't have to actually get a business number. You can use your own information. But just remember, this is all public information. So whatever you put, people can search it up if they know your business name. So if you want to maintain your privacy, I highly recommend getting a business number, business email address, and I do not recommend putting your home address because you don't want people to know where you live. So in this situation, you can go get a virtual address. You can use sites like Opus or ipostal.com. Those are some of the ones that I recommend. Once you have all this, go ahead and incorporate your business with the Secretary of State. Sometimes you will be incorporated right away. Sometimes it could take a couple of days. As soon as you got your approval, you're going to go to the IRS website and you're going to ask for an EIN number. They're going to ask you a couple of reasons of why you want one. Just put banking purposes to keep it simple. From there, you give them your business information, and then right then and there, they usually have an option to give it to you electronically. I recommend that. It's the quickest. save that PDF, and now you have your EIN number. After you have that EIN number, you can then go build banking relationships. A bank relationship is when you have some type of product with them. That could be a credit card, a loan, a checking account, a savings account. You want to build relationships with the bank you want funding from because they're going to give more money to the people they already know. Imagine if you're a stranger, you don't have any money with the bank, and you go ask them for money. If your personal credit is strong, most of the time they're going to approve you. But if you had a banking relationship, usually that means they would have approved you for more. And we've even seen people that have bad credit get approved from a bank they've been banking with for a long time because they just have that banking relationship. So it clearly shows us that banking relationships are important. So how do we build it? If you do not have a credit product with that bank, open up a checking account or a savings account. And if you're trying to get business funding, then open up a business checking and a business savings. One thing we highly recommend is also to deposit money, which leads us into the next segment. We want to make sure we deposit at least $5,000 into this account. If you have more, try to do 10. And if you have more than that, try to put as much money in there as possible, because this helps us when we go for funding. If we are showing the bank that we have 5, 10K with them, when we ask for that 20 or 30K credit card, it's going to be a lot easier to get that approval because the banks already see that we have money with them. It lowers their risk and it shows that we actually have money. So highly recommend that you put money in these accounts. This is what usually makes or break high limit approvals. If you do not have money though, it's okay. Just try to put whatever you have in there just to increase your odds. So once you're able to do the structure perfectly, the next step is the funding sequence. This is where we're going to determine which banks we're going to and what kind of money we're going to get. Remember, determining funds, all this means is what kind of money do you need for your business? Do you need 0% credit cards? Do you need cash loans? Do you need auto loans? Do you need lines of credit? To give you an example, if your business is e-com, a lot of the times what you need to buy can be swiped on a credit card. So at that point, take advantage of 0% credit cards. These are usually 0% interest, 9 to 18 months. In the real estate field, sometimes you can't get into a deal using 0% credit cards. Your employees also, you can't pay them with credit cards. So in this situation, a cash loan or lines of credit might be better. Cash loan, the money is deposited into your bank account, which means you can pull it out and hand it to your workers. Lines of credit is a revolving line of credit that you can withdraw and put money into a bank account and do the same thing there. Pay your workers or whatever you need to do cash transactions with, just like that. Now, the difference between a line of credit and a cash loan, they approve you and deposit a certain amount of money in your bank account. Once it's gone and you used it up, it's gone. But you have to make payments on that loan until you finish paying off the loan. A line of credit, if they approve you for it, whatever the line they approve you for, you are able to withdraw cash, deposit into your bank account, and then you can pay back what you owe and you have access to that money again. So it's always revolving. It's kind of like infinite money that you can pull out as cash into your bank account, whereas a cash loan, they approve you once and it's gone. You got to pay back the loan, and once you want more cash, you have to apply for another loan. So this is why lines of credit could be a better solution than a cash loan. But what I recommend everybody do is usually get a mixture of everything. Auto loans is one of those that not necessary unless your business requires some type of vehicle. If it doesn't though, you can completely skip an auto loan. But once you know what kind of money you're going to need for your business, go and get it. And remember, even if you don't need a cash loan or a line of credit, it might be to your advantage to still get it, because once we go for a round of funding, it's going to be very hard for us to get more money in a short period of time. So what I like to tell people and what I do for myself is I get as much money as possible. That way I'm in a position where I don't even need the money, because you don't want to be in a position where you need the money but can't access it. You'd rather be in a position where you have the money and don't need to spend it. So that's what I did. Most of my money I took out was 0% credit cards, but I still got myself cash loans and lines of credit. And I did an auto loan. Personally, I just got myself a Lamborghini. If you're not following me, follow me on Instagram. It's Alex Credit Expert, same as this YouTube channel. You guys can check it out there. But I actually leveraged my credit to get into a Lamborghini, zero money down, by getting auto loans and covering the gap in cash required through cash loans. So this is also just the power of credit, but that's a different conversation. What I'm trying to tell you guys is try to get a little bit of everything. Auto loans though, again, not necessary unless you need a vehicle. Now, once we figure out what kind of money we need, it's very important that we figure out which banks can give us this money. Not every bank is going to have a 0% credit card. Not every bank is going to offer a cash loan. Not every bank is going to offer an auto loan, and not every bank is going to offer a line of credit. And some banks, if they do offer a 0% credit card, some might only offer it for 9 months, others may offer it for 12 months, others 18 months. When it comes to cash loans, some cash loan banks will start at 8 to 12% interest rates, others will start at 10 to 20% interest rates. Some of them will go as far as 84 months, others will only go as far as 60 months. So you need to know which banks have what you want. Auto loans. Some banks will only do auto loans up to 60 months. That's only 5 years. Some banks are willing to go up to 144 months. That's 12 years. This reduces your monthly payment every single month. Lines of credit. Some banks start at 7% interest rates. Some banks give you 0% interest rate for a year. So this is why you want to figure out which banks offer which products, build that relationship, and then go to them to ask for that funding. And this is why I don't recommend you just have one bank account that you go to. Have multiple relationships. That way you can always access the best product for your situation. Now, once we know which banks are offering what and what kind of money we need, the final thing is we need to know the sequence. Remember, certain banks are going to pull from Experian, some from Equifax, some from TransUnion. Now that we know which banks we're going for, list 3 that you want that pull from Equifax, list 3 that pull from Experian, list 3 that pull from TransUnion, and then apply an order. This allows us to maximize our hard inquiries, because if we apply for 3 banks with TransUnion and 3 banks with Experian, that means we applied for a total of 6 banks. However, by the time we get to Equifax, since they're only checking our Equifax report, they're not even going to see that we just asked 6 banks for money, because those hard inquiries don't even show up on the Equifax report. This is how you maximize funding, because now you went to banks that only pull 1 credit bureau and you were able to ask a total of 9, compared to if you went to banks that pull 2 or 3, now you might only be asking for 3 banks for a total of 9 inquiries, or maybe you're asking about 5 banks for a total of 10 inquiries. So this is why you need to know which banks are pulling which credit bureau in order to maximize the funding. And the final thing is, once you get the money, be smart with it and deploy it. The first thing I'm always going to tell everybody is to get a coach. You need to get a coach or a mentor, because this is how you save time. This is how you get successful very, very quickly. And this is how you have guidance and help, because entrepreneurship and business, being real, it can be a little bit risky and it can be a little difficult. If you don't have anybody to talk to about what's going on, it's going to be hard to keep progressing. When you have a coach or a mentor, it's very easy to just ask them for help and they're going to be right there to guide you. It's on you to execute, but at least you have the guidance and the knowledge on how to move past that obstacle. So I highly recommend yourself to get a coach. The next thing you want to do is buy equipment. Whatever your business is, you need to buy equipment for it. For my business, since I do a lot of business online, I'm big on my branding. So for me, education, the whiteboard, the camera I'm recording this on, the content studio, the settings, the lighting, everything has to be on point. So for me, I invest into the equipment. For you, depending on your business, if you have a rental car fleet, the equipment is probably going to be tractors, it's probably going to be cars. If you have an Airbnb, it's probably going to be chairs, desks, lamps, whatever. The next thing you want to do is also hire a team. As you're learning the business, you want to replicate yourself in different areas. So you want to hire team members that can take care of different tasks, so you're not always tied down to one task, and you can keep growing and scaling this business. So it's important that you hire the right team so you can keep moving forward. And finally, you always want to be investing into yourself. What I recommend is that with whatever money you have left, always make sure that as you're making money, put it back into the business. Make sure you're always learning more, educating yourself more, getting into the right groups, going to masterminds, because all of this is going to increase your value. You are your biggest asset and your biggest investment. So put money into yourself, because the more money you put into yourself, the more you're going to get back and the more you're going to be able to help. So this is it, guys. This is how you turn credit to capital. This is how you structure yourself to get funding and then deploy the funding. If you guys follow these steps, you will be successful. Hope you guys like this video. If you guys are not following, make sure to hit the subscribe button, like this video, put a comment down below, and I'll see you guys for the next one.